Hello money makers. Welcome to today's top 5 market updates. We start today in the UK, where the Bank of England holds its monetary policy meeting later today. The Bank of England is expected to announce its policy decision at 8 a.m. Eastern Standard Time. Bank of England expected to expand bond buying, but it's wait and see on negative rates. Since the start of the pandemic, the Bank of England has cut rates twice from 0.75% to 0.1% and announced £200 billion of new quantitative easing, bringing its bond buying programme to a total of £645 billion. Next up, we head to US for some weekly employment data, where the US initial jobless claims report is due out at 8:30 a.m. Eastern Standard Time. They are expected to be 1.3 million for the week ending June 13, down from 1.5 million reported the prior week, continuing a downward trend as the COVID-19 lockdowns continue to ease. Continuing jobless claims are expected to be 19.9 million, compared to 20.9 million the prior week. Our next update is from yesterday's Fed testimony, where Chairman Powell announced a move away from buying ETFs. Federal Reserve Chair Jerome Powell made the comments before the House Financial Services Committee in the second day of his semi-annual testimony on Capitol Hill. He said the central bank's corporate bond purchases ultimately will move away from ETFs and into individual issues. This week, the Fed announced it would be buying the actual bonds as part of 2 credit facilities it implemented during the coronavirus pandemic. Next up, we have news from New Zealand, which has reported its weakest growth in 29 years, with Q1 GDP contracting by 1.6%. The contraction exceeded market expectations of about 1%, even though the quarter only covers the early stages of the coronavirus crisis. Westpac Bank predicts GDP will plummet by up to 13.8% in the April to June period, providing a second quarter of negative growth that would officially tip New Zealand into recession. Our final update is from the EU, which has announced its unilateral intention to proceed with its digital tax. The European Union is ready to go it alone with taxing digital services of firms like Google, Amazon, Facebook or Apple. If there is no global deal on such a tax this year, European Economic Commissioner Paolo Gentiloni said on Thursday. He was responding to the decision by the United States to pull out of negotiations on a global solution to taxing digital services on Wednesday. Thank you for watching. Subscribe for regular updates. Only on Capital Street FX.